Okay guys, so I wanted to make this video again to repeat and reinforce the power of watching those EMAs, aka your trend lines. If you're advanced now and you don't really feel like you need the EMAs anymore, then your eyes should be able to see diagonal market. But if it can't, the EMAs are effective to help you see when the market is being pushed down or being pushed up and you're not too caught up in the current moment of market condition. So we're going to talk about a couple of trades from this week. This is now the Christmas week, 2018. And what I want to talk about here is some of these GBPJPY trades in the beginning of the week that were buys. Okay, in the beginning of the week, 142, 150, I was buying and buying and buying and buying. And then by Asian session, I changed my direction. Let's scroll here a little bit. And we started selling. Okay, notice that there was a strong sell point, and then we were still in that buy zone. Buy zone is still holding, but what's really happening here is we're starting to get squeezed. How we know that is the market is getting ridiculously small, right? It's getting squeezed up. We had been buying for a while from this position, and then we bought, I think, from here. This was a news situation, and then I even sold on this. It was on Instagram. If you follow me on Instagram, at Gustavo Zaps, don't forget to add notifications. But if you do follow me, then you know that that we were selling, and the way that I trade is intraday. So I use the day's conditions to tell me what I want to do here. Also, I don't pray and hope and wish that it goes in my direction. If it breaks a certain threshold, then I cut the trade because I know that I'm wrong. Yes, it would be great to always be, like for example here, to have been selling and selling and selling and selling, but the way that I do it, the way that I want people to understand the market is within all trends are smaller trends. And these trades look small, but some of these trades are 200 pips. Some of these trades are hundreds of pips in this direction. And then all of a sudden it goes in that direction. And if you know where you're at on the chart and you know how to maneuver through the market, you'll be able to actually profit on any trend. It's also depending on your amount of pips you're gunning for, that's why for many of you we start small. We start humble, 30 to 50 pips, 20, 30, 40, 50. That's the humble beginning. And there's nothing wrong with being a career trader that goes for 20, 30, 40, 50. There is nothing wrong with it. If you're profitable, you're doing better than 99% of the people out there. All right? If you're catching pips, profitable pip-wise, you're doing better than so many people out there, you have no idea. Okay, so let's get into this. The other one that we're going to cover is gold. On gold, it was a quick trade. It was a one hitter, and basically, we saw the setup, and that was it. So the importance of gold is again EMAs and trend lines, area of price. The market, it ended up tanking 150 pips, and then we took the buy. If you're on the lower frame and using that lower frame only, you're in trouble, because you're not seeing the bigger picture. So we're going to talk about that also. This is the same stuff we talk about in a lot of other videos, but it's what matters. This is what matters. What matters is your ability to see the bigger picture and the smaller picture and react accordingly. So let's get into it. Minimize. All right. So GBPJPY, we're going to start with that. Now I'm gonna keep the EMAs on here because this is not gonna be one of the longer videos, and I don't know I always say that, but this is definitely gonna be a shorter one because I'm tight on time. It's Christmas time. I gotta do some shopping. I procrastinated until today. So at the beginning of the week, we started from here, okay, 142-ish area. So we were somewhere in this zone. All right, so we're gonna go and we're gonna give this a little mark so that we know where we're at. All right, so we were 142-ish areas around here. Now notice that we had some trades here, right? This one's 50, that one's 40, that one's 40, all right? There were some trades. This is hour chart. So on this hour chart, you still had 30 to 50 pips of trades. I took 100 pips total on this day. Why? Because I was TPing on purpose, because I just understood what was going on here. We're in Christmas season. I felt the volume was going to be low. And the only time we were going to get any actual movement was on breakouts. And even with that, this was a monstrous breakout, and still it's not that big because of the time of the year. So when you look at this market, if you are on an H1 only and none of this has happened, this looks like this looks like the Fibonacci continuation on a lower frame, right? It looks like it's ready to pop up and skyrocket to the top. The problem is you're not looking at that higher frame for what it is, right? We're going to go for daily so that we can actually see something here. Take that fib away. What does it look like the market is doing on the daily? The daily, the weekly, and the H4. Those are your bread and butter charts. We go from weekly, daily to H4. If you don't know that, you should be watching the other videos first, or you're probably still brand new and you haven't realized, and we haven't spoken about that yet. But when you look at a chart, you start from higher first because you need to see what's really going on here. So let's mark this up. The market created a high here at a key price point. It broke another key price point here. What else do we see? What else do we see on this? Look at the candles for current market conditions over the last couple of days. The market breaks through, supports under, tries to go up, creates a wick. What is that saying? It's saying the bears is controlling the market. Sellers are running the market, right? So even within all that, I was still trying to buy. Why? Because I understood what was happening. If it broke that low, the trade was done. If it started showing me candles, the trade was done, right? So when we go to that H4, what do we see? What do we see? EMAs, right? We're under those EMAs. We're staying under that 144-200. That's important, right? The market is trending downwards. If you don't see it, it looks like this. The market is coming down. We're staying bearish. It's breaking lows, right? This is my floor. My floor becomes my ceiling. Let's change this color real quick. What color you guys want? I'm going to guess you want gold. Gold. Let's do gold. As good as it's going to get. All right. So my floor right here, my low, becomes my ceiling. Yes, it's off a couple of pips. That's why we let the candles create, right? Because if we go to that H1 chart and we actually wait for the market to show us its hand, here you go. That's the overextension. EMA 144, back down, lower and lower and lower and lower. We're getting lower and lower. On the lower frame, we're getting lower and lower as those hours pass, lower and lower and lower and lower until finally we got the big sell-off, okay? So all that already happened. Boom, we're done. The market goes back, hits this high, creates three tops, and then drops again back to that higher frame. Okay? Now we're dropping. Now here's the key price. You need to know this. Right? This was a floor. So what do we do here? Back down to the lower frame. What does it say? EMAs are still above me. That means that there's channels running through all of this. Through all of this market, there are tons of channels running and pushing us down. It's saying we're staying low, right? We're getting squeezed on the down. So when the market came to this key price, 1 candle, 2 candles, 3 candles, 4 candles, 5 candles, enter, boom, 60 pips, right back down. What is that saying to you? Bears are still around. Try it again. Boom, 40 pips, right back down. Try it again. Boom, 35 pips, right back down. Let's go back to my screenshot. Scroll. Scroll. All right. Market down, right? Back and back down. That's the first drop down. All right, hopefully you can see that. 3, 2, 1, 1, 2, 3. All right. Then we minimize this again. First drop. Boom. Right back up. Test that trend line even lower this time. Pay attention. Pay attention. Market's getting squeezed. You're in between this low and this. What's the high likelihood something's going to happen? On the up, it's getting lower and lower. Your probability is getting lower and lower. Stop buying. You try it again. Stop buying. It goes through. Cut this. The moment it fills this area right here, this trade has to be cut. Now, you don't cut it. You're super sharp because you're trained by Zaps and you're only, let's say you're here. Do you survive? Nope, you're out of here. Okay. Anyways, if you would have been still in this trade because you're somebody that has a bigger stop loss than 40 pips, then you would have survived the trade. If you're 30 pips, you're out of there. Honestly, what you're supposed to do here is the moment it does that, you're out of here. Why? It passed that threshold. You created an hour candle. They even tried it. You're getting lower and lower. You got to be blind not to see this, or you may not want to see it. That's the issue. You may not want to see what the market is saying to you. All right. So then you have another threshold right there. That's going to be important later. The market comes down, comes back up under what was once your floor. Now it's your ceiling. Comes back down, comes back up. Still your ceiling. Comes back down, comes back up. Still your ceiling. Comes back down, even lower. Not even a ceiling anymore. Now it's a 13-foot ceiling that you cannot reach. You're in a mansion. All right. So you're looking at this like, should I keep buying? What should you do? Right? Now you're forming an even lower trend line on the lower frame. You go to that H4. What does it look like? What does it look like? Bulls tried to take over, right back down. Now you're at another threshold spot. You're at another key price point that you should be paying attention to. The market is struggling to get through there, but the bears are winning ever so slowly. Something else to keep in mind. This is like 20-something hours of play out. The market is in no rush. You shouldn't be either. In the biggest of trades, there was time that it took to develop. Think of it like a rubber band that's being stretched all the way back until finally you let it go. All right? You have to wait. Guessing the price is for suckers. All right? You have to allow the market to play itself out. All right? So at that point, what's going on? EMAs above us. H4, EMAs above us. All right? Price action getting lower and lower. What should you be doing here? If you can't sell it because you don't have the stones to do so, then don't do anything because buying is a sucker's play. All right? That's what happened with GJ. When you look at this market, you can't continue to force the trade. I am aggressive intelligently. I teach people to see the micro of the market, to see this, and the macro of the market to see this. The bigger picture is the down. The smaller picture is the up. But guess what? Trades are still there. And when you get up there, let's say, and the reason for that is really this. You're not always going to be right about trend. Every now and then you're going to mess up. Everybody messes up. They see the market wrong. They get confused. They get thrown off. The market does something wild. But you know what does work? Paying attention to every time the market creates a 4-hour candle. Paying attention to the daily close. Watching structure from that point of view instead of always focusing on the lower frame because you're just trying to catch a trade and make some money. Now, yesterday, if you go to my Facebook or Instagram, I posted some short-term trades. I took the GJ for the first little drop, for the first drop like that for about 65 pips, and then I kind of left it alone. All right, it came back and retested, and it did all that by itself. I moved on to other pairs. All right, I also took GCAD. On GCAD, I took an up and a down for 50 and 60 pips on the both structure. Why? Because I'm paying attention to the micro. All right, and then I dropped it, and then I moved on to gold. Gold was the one that I saw, and I really liked it, and we're putting our money into this one. All right, so it's important for you to be able to differentiate H1 from H4 daily, weekly. Here's my rule of thumb, and I say this all the time. By the time you get to the H1, you should already know what position and what price direction you're trying to go in. The H1 is simply to let you know how things are starting to play out and when you should be entering this market. Like if I'm trying to take a sell, if you look at my screenshot from the Telegram, go back and pause the video, you'll see that 1, 2, 3, 4, 5 drop. All right. So my entry was easier than this one. 1, 2, 3, 4 drop. The market doesn't care. Okay. Here's what you can argue. Yeah, but Gustavo, what about this one? It's 1, 2, and then dude or dudette, Whoever's watching this video, it doesn't matter. It didn't fit your rules. It didn't fit what you like. It is what it is. It won't be the first trade that you miss. It just won't. It's going to happen. All right? So for GJ, that's the micro to macro. I also want you to see the trend lines and EMAs, the effectiveness of them. All right? If I go to the higher frame, those EMAs are spread out. This is in a previous video that I sent, I think the last one or the one before the last one, where the EMAs are spread out. The market is bearish, right? They tried to take this up. It's bearish. All right? So when you look at it, you have to pay attention to what's really going on here. It's bearish. It's bearish, and you need a strong area of support and resistance to even have a chance at bringing us back up. You need it. You need it weekly. All right? You need a strong area of support and resistance to even think of bringing us back up. A highly sensitive point with volume to even think of going against it. And you still got to let the market show you its hand. Period. All right, let's move on to gold. Okay, now we're on gold. Let's go back to that telegram. Gold trade yesterday. Let's find it. Oh, good. Okay, here we go. Gold. Nope, wrong one. By the way, I'm not editing this. I'm not editing this out. Right? Screw it. Gold. Now, if you remember this little blue box, it's in one of your videos, is where we started buying the macro of the market. Understanding that there's a massive trend line, support area, buyer power here. I never forgot that. That never left my mind. Took it for about 200 pips, dropped it, broke the trend line. There's the continuation. It's over. That's it. Does not matter. That's it. I stopped thinking about it. I left gold alone for like 2 weeks. We hit that high. Guess what I did? Sold it. And then we dropped. All right. So now we're going to take it back to the chart. All right. So gold. Let's go to that H4 real quick. The market on gold was very bullish, right? Remembering that the bulls have been controlling this and causing breakouts over days. We are over our EMAs on the daily, which means that there are trend lines under us, running us upwards. All right, point starts here, but you get the point. So we are running upwards. The market is definitely running through an upwards channel. All right, but you don't even need to know that. Not important, not as important as the support of the market running up. The EMAs are telling you that. The market is causing breakouts behind breakouts behind breakouts over and over, causing breakouts. It's trying to sell and then bang. All right. So we take it back to the higher frame, to the nicer frame. My favorite frame, the H4. I like the daily and the H4. Weekly has its power as well, but for what I do in my brain, the H4 is the one that helps me really figure things out for right now. So bullish is in my mind the whole time, but I'm not dropping the fact that there are certain areas in this market that are going to cause key seller issues. Okay, so all right, H4. So when I called out for the sell the first time, it was this one right there, and then the market caused a lower frame breakout right there. What do you see? EMAs, right? EMAs are holding us up on the H4. The market breaks and we get a continuation of 126 pips. Come Sunday, I'm looking for a sell right here. What am I looking to do? Re-break these trend lines to come back up and to break this area right there. I want to break back. I want to hold here to take this down, right? I called for a sell continuation of this. Why? Because I wanted to get down to possibly here, right? I wanted to get about 100 to 120 pips to retest the highs down here. That's what I was looking for, right? It made sense in my mind for that to happen. Now, I could be the greatest trader of all time, but eventually I'm going to be wrong, but I can avoid losing by just allowing the market to show me what's up. Now notice, this continuation here, a bunch of 4-hour candles before, bang, right? This one, do you see any kind of stalling? Is there any kind of understanding that we're actually going to drop here? The answer is no. There's nothing. There's just slightly higher, slightly higher, slightly higher, and then bang. There's nothing, right? Once that happened, it's over. Finito. Nothing to do here. Now, you may have still been looking to sell it. I personally called the trade invalid in the group, and I was done with it. You maybe have been looking to sell it, but when you look at this market on the H1, H4, is it a good idea for you to continue to sell? Now, you took it and you went for about 30 pips, and then it started doing the same thing as GJ was doing, right? It started squeezing up, right? GJ was doing it on the downside. Gold was doing it on the upside. There's no correlation there, so don't go looking for it. It's just price action, please. So when you look at it, it's going higher and higher and higher and higher until finally break out of this zone and bang, 90 pips. That's why we have stop losses, just in case you miss the cues, right? The market's going higher and higher and higher until finally bang, right? So right here, there it is, okay? What's under us? EMAs. There's a trend line there. It's trending. It's telling you, listen, we're trending. What else do you see? Weakness. Points are getting higher and higher. Stalling. 1, 2, 3, 4, 5, 6. Bang. Okay? So you got a lot of stuff telling you up, 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 up. The market's been bullish. Okay? Now here's the play from last night. Last night, what happened? H4. Look at the way the market works. Now we're going to remove all this crap. All right. The market ends up hitting a high and then dropping for 163 pips. Now, if you're brand new or if you're not listening, you're looking at this like, oh my God, this is going to be the tank of the century. It is over. This thing is dropping to hell. Okay. And if we look at it for what it is, what happened here? The market decides to stop. Right there. EMAs. EMA 144. EMA 200. Finito. Stops. More importantly, if you're not paying attention to that, if you're doing what I'm asking you to do, which is look at that higher frame, what really happened here? H4. Boom. Key price point. Buyer's position. Buyer's breakout. Boom. Retest. Ceiling becomes floor. Ceiling becomes floor. 4-hour candle creations. EMAs are still below us. On the H1, guess what? EMA, like I said before, EMAs are still below us. We're bullish, right? The bulls are controlling this market, correct? There's your entry. This is why I took the trade. Right now, this thing's up almost 200 pips. The trade was not hard to get into, right? Now, it didn't give a lot of retests. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 hours of stalling. It did not give a lot of retests. All it was looking to do was just take us right back up. This is called manipulation to take you out. Continuation. Okay? So we look at that H4 again. What else happened here? Remember in the earlier part of the gold breakdown? Remember what happened here? This is where I was trying to take the sell to continue down. This is where it didn't give me any kind of information to let me take this trade. It never stalled. On a reversal, 2 to 3 hours of wait. Right? On a continuation, if you want to be aggressive, 1 hour. It's always good to wait 2, 3 hours, 4-hour candle swap. You got to work those numbers to see what you're comfortable with. Personally, there's like a little bit of a timing mechanism in there. Also, looking at the way the candles are forming is important. But when you're new, a hard, fast number, 2 to 3 hours. Okay? You should always have some sort of rules for specific scenarios. This scenario right here, I wanted to wait till London until it started doing what it was doing, which is creating the candles higher and higher and higher. Right? When it did the retest with the wick, that's it. Right? It's a 30 pip stop loss. So 30 pips will put me where? Under that zone. That's why it's important. Trying to get as low as possible to take that trade. Okay? Because 30 pips would put me under the zone of support, which would mean that the trade would be invalid anyways. It would be a clean loss. So what happened? The market dagger drops 158 to 160 pips right to the area of breakout from this trend line and this important support price. And then the market just shoots up. The EMAs are there screaming at you, hey man or lady, please do not keep selling. Do not sell into me. If you're going to do anything, buy. The market is also not ready for any kind of sell continuation. So if you decided to take the Fibonacci and draw it this way, you're not paying attention. Right? We're supporting over a price. Do you really think that we're going to actually continue on the way down? No. It's just not going to happen. The way the market just froze there is telling you everything you need to know. In order for this to be broken, higher prices have to be created for orders to gather up and for this to fuel the downtrend for a continuation. All right. So when we look at that H1, was there any kind of stall in your sweet spot? Nope. Right through it. Right here, you get a bit of a stall. Okay, you take the trade. 34 pips, right back up. You're against the trend. That's the risk you take. You're against the trend. The profit is there if you're sharp. Now, if you're down here, you got smacked up real good. But if you listen to what I say, equal or better prices, that's your only shot. High risk. Very high risk. You see this happening, very high risk to take that sell. Extremely. Just because you've hit a high means nothing. What's happening? What's happened in that market before? Right? Where did this trade start? Could a ton of buyer orders have been picked up? Could a ton of seller orders have been picked up? Why would this trade work out the way it's working out for me? What's my information telling me? What prices have been touched? What's more likely here? Right? It's creating higher highs. I'm sorry, it's creating higher lows. It's trending upwards. EMAs are under me. Support prices are under me. Ceilings are becoming floors. They're trying to push down, but it's not working, right? It tried, it didn't work. Right back up. Should I sell again? The answer is no. The answer is no. Okay? So that's the lesson of the day. This is Merry Christmas. Merry Christmas to you all. Happy Hanukkah, happy holidays, whatever it is you do for the holiday season. I hope you are happy and healthy and safe doing it. And I wish you guys all the best in 2019. If you have not been trading, reach out to me. Let me know what's going on. I'll provide you an updated list of the videos. If you haven't received them, they should all be within your emails. And that's pretty much it. And as I always like to end every video, happy trading and Happy New Year.